and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on D Street. Remember, we've held on to the 24,800 mark for the large part of the session today. We were hovering in a narrow band of a range throughout the course. It was select segments that have been driving the market sentiments higher, and to point out, it's the auto index that's higher by over 3%. That's definitely driving in the fastest lane. Remember, over the weekend, you saw a lot of companies announce the benefits of GST rate rationalization to be passed on as price cuts to consumers, and that is what has really lifted the sentiments once again around the auto stocks, both four-wheelers, two-wheeler stocks, commercial vehicle majors, even the auto ancillary basket for that matter is clearly in the limelight as of today, and that is really pushing forward the market move. When we look at some of the other sectors that are also supporting the sentiments, you can see PSU banks that are up by about 0.5% in trade today. Broader markets have picked up some pace. You have real estate names that are also hovering higher. But what has slipped? It is the IT stocks that have actually taken a back seat today. Look at the kind of decline there. Almost 1%. It's now shifted to the day's low point. So the weakness has only exacerbated towards the end of the session. Consumer durables down by 0.4%. FMCG and pharma is also down in trade. So autos, PSU banks higher, but IT consumer durables lower. Top movers on the Nifty, you have M&M, that's up by nearly 4%. You also have Bajaj Auto, Tata Motors, Eicher Motors. 4 of the top 5 movers are from the auto pack today on the Nifty. JSW Steel is also hovering higher. On the lower end, however, you have names like Trent, for instance, that have taken to some profit taking, about 3.5 to 4% lower tick. You can look at Asian Paints, Nestle, that's also on a declining trend. Coal India, Dr. Reddy's from the pharma pack, that's also a large cap that's also slipping away. And you can see SBI Life Insurance as another one from the insurance basket that's taking some time to really perform. Let's welcome our guest on board now. Mr. Avinash Gorakshakar, market experts, now join in to share with us his views on the markets. Avinash ji, warm welcome. Good afternoon to you. Good to have you with us. Let's start off by understanding your overall thought process on the market mood and how it has shifted over the last couple of weeks. What is next now? We already have a lot of big news that the markets were waiting for, now seemingly digested. We now have to wait for September 22nd to finally see how the consumption theme really takes off in the festive season. Till that time, what's your approach in the market, sir?
Yeah, I think, Sakshi, first of all, today's market, we've seen a good bounce back in the auto sector, as you mentioned, largely because, most of the auto companies have decided to cut prices. They've started giving the benefit even before the 22nd September deadline. But I think, markets, the way they are, they like the narrative, and that's why stock prices are up. But the real benefit of these numbers is likely to be felt fully from October to December. I think because we have the Shraddh period currently going on, and I think post September 22nd only you'll see a good volume push. So consumption is going to increase not only for automobiles but a lot of other domestic items like consumer durables, consumer appliances. Typically I think most of the B2C kind of product items. So clearly that is where you're going to see a lot of action. And I think, see, the markets, the way they are, I think last week Mr. Donald Trump had put up a very interesting tweet where Mr. Modi responded very positively. So I think there are very clear indications that even on the import tariff, possibly by November or December, we could see a turnaround or maybe a kind of a positive kind of impact for India. Point number 2 is, I think the way the markets are going, I think we are seeing a lot of supply of primary paper. We are seeing almost 3 to 4 main board or SME companies, making primary issues. Plus FIs are selling in reasonably big quantities every day. So I think this is going to put pressure in the market, at least in the very near term. I think post September, you'll see a big kind of revival in consumption. I think October to March possibly is going to be a period where you will see not only volume growth in for many sectors like cement or for that reason FMCG, autos, and that is definitely going to create a lot of good corporate earnings kind of trajectory for most of these companies. So I think net it's a good positive move. I think we'll have to wait and watch how things move on. But I think currently 25,000 is a resistance. Until that time, the markets are going to remain in a small range. So I think we'll have to see how sectors like banking, sectors like autos, auto components, capital goods, hospitality, whatever is connected to the domestic market, Sakshi, is bound to do well in the second half. So we'll have to keep a wait and watch. But at least we see this to be a very positive development, and I think hopefully we should see the markets reacting positively in the second half.
Okay, fantastic. Avinash ji, what we'll do is, like you rightly pointed out, some of the sectors that have gained some limelight, and that's where the focus is. Auto segment, as we all know, is definitely reflecting, the kind of sentiments that there are as far as hopes on a bumper festive season upcoming is concerned. And to really discuss and to decode, for all our viewers, you would have actually been seeing a lot of news flows around the cars that have already announced their prices cuts right ahead of the September 22nd deadline as well. So you must be wondering what exactly should your next course of action should be in case you are looking to purchase a vehicle for yourself. So what we'll do is we'll get into a deeper discussion. We'll also invite on board our another expert, Mr. C.S. Vigneshwar, the president of FADA, is now joining in on the program. Warm welcome to you, sir. Thank you so much for taking the time out. And we will also have our in-house expert, Chetan Bhutani, who covers the auto segment, to join in as well, to really decode for us what all of this would mean. But Mr. Vigneshwar, starting off with you, I really wanted to begin by understanding, have inquiries already started to pour in quite a bit with all the announcements that are coming in from the auto companies? Which are the segments that are getting you more inquiries, at least for now? Have the walk-ins started more? What exactly is the mood at the dealerships?
Sakshi, inquiry started building up quite early, from the 15th of last month, because there was something which was hinted by our Honorable Prime Minister. So people got curious, they started asking questions, then there was fantastic response in terms of people walking into our showrooms and that being converted to inquiries, and inquiries being this month slowly being converted into sales. But having said that, even last month it was quite decent. The kind of growth in the two-wheeler segment was about 2% over last year, and even the growth in the passenger vehicle segment was about 1%, which wasn't great. But we were thinking of a degrowth, but it wasn't so. A lot of people actually went ahead and bought these vehicles. In Kerala and Maharashtra, especially because of Onam and the Ganesh Chaturthi being very prominent there, prominent festivals. They were very, very strong growth where they beat the national growth by a long shot. So yes, so I think the announcements have been great. A lot of the postponement has happened towards this month, and we're going to have bumper sales going on from here. As a overall restructuring of the GST rates, fantastic. I think it's a breakthrough. It's kind of a path paving gesture. And for the medium and long term, I think it's fantastic. We really thank all the state governments and also the central government to be on the same page on this. So congratulations to that. We are awaiting the bumper business which is going to happen from now. Prices have dropped. RBI is talking about a reduced interest rate. So all these things augur well for the economy.
On the same point, Mr. Vigneshwar, I actually wanted to ask, some companies have already announced the price cuts, right, before September 22nd, when the rollout is supposed to happen of the fresh GST. So how does that work, and what is the impact that you're facing because of that?
Unsettled issue regarding cess, the consumption cess. Cess was actually meant to be paid by the end customer. Right now, we are stuck with a bunch of vehicles in inventory, a lot of vehicles in inventory, and this is very strange that we need to bear it. So a lot of companies actually come out and said, let's be aggressive. A lot of vehicles would be moving on the 21st of August, since it's the first day of Navratri, 22nd, since it'll be the first day of Navratri. And a lot of people customers would want to take delivery on that day. So it's impossible for us to give deliveries on that day alone. So we need to spread out our resources, and we start giving deliveries even before the rate cuts come in, the GST cuts come in. So right now, some companies have taken the lead. They're a little bit aggressive. They've actually gone into the market and said, we will give you the benefit, we'll pass you the benefit of the rate cut right now itself. So you can go ahead and buy your vehicle right now. And so these are things which are being worked out by the companies, which is excellent, which makes sense. Because we can't deliver every vehicle on the 1st of Navratri, so we probably need some vehicles to be delivered before. That's why companies have taken price cuts, and that's how we are going back to the customer and saying that you can get your benefit right now. We don't need to wait 2 weeks from now.
Okay. Avinash, I wanted to come to you as well. Hold that thought, Mr. Vigneshwar. I'll come back to you. Avinash, just wanted to understand from you. We were looking at a time gap between the 15th August announcement of Prime Minister Modi and then the final, rate cuts that were announced by the GST Council and the implementation date, which is September 22nd for now. How are you looking at these auto companies' earnings to reflect that in the ongoing quarter and the next quarter, which will actually reflect the final bumper festive demand?
No, I think, Sakshi, clearly the real full impact of the GST cuts would be reflected in the third quarter. July to September may not see the full impact. And I think, even if companies reduce their prices, as I told you, the sharp period is going on. So typically in India, very few people go and buy vehicles during the sharp period. So I think you're going to see revenue pickup, from the first day of the GST cut, that is the first day of Navratri. And that is going to be just for a week, for this 1 month. So I think pura impact jo hai, I think full impact will come from October to December. Typically, December is a soft month because as you are must be aware that buyers don't buy vehicles in the month of December because of the nameplate issue. But this time it may be different because you're going to get a decent price cut, and companies may offer some schemes or some packages whereby they could see the volume growth kicking in much faster in the month of December, which usually does not happen. And typically, the fourth quarter is going to be a period where you will see this momentum getting sustained in a much bigger way, because typically January to March is supposed to be a bumper quarter for most of the automobile companies. If you talk about passenger cars, if you talk about commercial vehicles, so I think in that aspect, third and the fourth quarter could be really significantly show the volume growth enhancement which we are all looking forward to.
Okay. Mr. Vigneshwar, coming back to you, just to help us understand, in the interim, what happens? Are you, is the auto industry, the companies, the OEMs, are they looking at taking some loss on themselves? Are dealerships also looking at some loss that they may have to bear in the short term till the time the final demand really picks up pace? And, people must not be wanting to take even the deliveries before September 22nd. How are you looking at all of that aspect play out, sir?
Basically, dealerships take a loss. There are two entities here. One is the government, one is the manufacturers. The government basically brought in cess for a limited period for 5 years and then they extended it again. And the cess was supposed to be paid by the end user. I don't know where the channel, a person like a distributor like me or a dealer like me ends up paying cess, which was meant to be for the end user. So we are actually speaking to the government to see the unfairness, to make them see the unfairness of this. Probably they missed it out. So we are talking to them and see what best can be done, because this is not supposed to be borne by businesses. This is supposed to be borne by end customers and even the OEMs. We've been telling the OEMs very clearly, 21 days of stock is the max we need to give the flexibility to the customer. But we've been for the last year and a half, the stocks have been over 50 days, sometimes even reaching 80 days, 85 days. So it's clearly on the manufacturer to go and look at themselves and see where their systems can improve and not overtly burden our stockyards and our books with their stock. Had the stock not been so high, I don't think the headache would have been this high. But the cess is right now is an absolute disaster if the dealerships are supposed to bear it, because our rough calculation is about 2,500 crores upwards. So I don't think, being in a thin margin business as we are in and dealerships, we can't manage this. We need the government to help us out. We need the OEMs to see what best they can do.
Absolutely, understood that, sir. We also have a lot of viewers' queries that are coming in, given the fact there are so many changes happening. We'll take one query with you, sir. This is from Pranav Singh. He's from Delhi. He says, if I buy a car right now to avail the GST relief, but the showroom has low inventory due to high demand, then how do I ensure that I will get a car, in this festive season?
You have a lot of choices as a customer. There are multiple brands available. There are multiple dealerships of the same brand available here in your city or the city next to you. Just give them a call. And we have a lot of vehicles in stock. Believe me, we are at an overstock situation at about 56 days. That's what our recent press release talks about. So I don't think you'll ever come across a situation, in a very rare case maybe, but most of the cars which are out for sale are available for you to take delivery of.
One query that's coming in for you, sir. This is from Sachin Patel. He's from Vadodara. He says, do used car buyers also benefit from GST 2.0, or is it only on new cars?
Even for used cars also, you'll be finding good deals going on. So it's time for you to go and pick it up. You'll have great deals in used cars.
Okay, got that. Coming back to Avinash also, just there's one more query that we are getting from one of our viewers, Avinash ji, and we wanted to toss this one to you. This one is from Priya. She's from Pune and she says, with GST relief boosting the auto sales, did I miss the bus to get onto the auto stocks and buy them, or is it still a good time to invest in some auto stocks right now?
Sakshi is quite significant. So I think she should not feel that she has missed the bus. But yes, I think there are many large cap companies like M&M or maybe Ashok Leyland, or for that reason, typically from the auto component space, where I think the risk reward is definitely looking interesting. I think what the market will do is, Sakshi, they will start discounting FY 26 once the September results are out. And September 27 will start be looking at by most of the analyst community, because once 6 months are over, markets normally don't look at 26, they will start factoring in FY 27 earnings numbers. So I think, yes, there is a good opportunity for runaway growth for these companies. And I think definitely, I think if you have a 12 to 15-month kind of time frame, then I think there are lots of companies within the auto component space, from an investment perspective, which can be considered. So I think you just have to probably keep a time frame of 12, 18 months, and I think you'll definitely make a decent risk reward.
Okay, fair point. Mr. Vigneshwar, coming to you for last couple of questions, I wanted to ask you one. At the dealerships, are you noticing any instances where the dealerships may not be accepting any vehicles or deliveries from the companies at this point in time? Second of all, like you pointed out that you are heavily stocked, a lot of dealerships are heavily stocked, and so customers should not worry about whether they will get the car that they book. So what was the expected waiting period if somebody wants to book it for the current festive season, sir?
So before answering this, I would like to talk to Priyaji, answer her question. Whether you buy a good stock right now, I don't know, but you can always go and get yourself a good car or a bike. So it's a great time to go and buy it. And more importantly, we're asking, kind of answering your question. There is enough stocks at dealerships, but in case these offers are strong and customers are going to go and take up these offers, we will be running out of stock. And if we are running out of stock, it's better if the customers make a decision right now, because obviously we have well stocked right now, but there are 2 weeks to go for Navratri. And in case we sell out our stock, then it's very hard for us to arrange vehicles for customers. And talking about the other scenario, you asked about whether we have stopped taking deliveries from wholesales from manufacturers. Unless the manufacturer gives us absolute assurance that we don't buy more and we lose more. So if they are able to cover the cost of sale, definitely we would be able to support the manufacturers. But I don't think, given the current plight with the consumption says, none of the dealers have the appetite to go and pick up more vehicles and lose more on it. Just doesn't make sense. We are here, we as businessmen, we are here to make a profit out of business, doing the business the right way. And if the manufacturer supports us, we'll definitely take wholesales. Otherwise, I don't think it makes business sense for us to pick more vehicles from manufacturers until the GST regime, the new one, kicks in.
Yeah, fair point. Thank you so much, Mr. Vigneshwar, for being with us and for explaining to us the entire scenario, and all the very best for the upcoming festive season, sir. We'll definitely get you back with us once all of these issues are ironed out. You've been seeking a meeting with the government. I hope all of these issues are also ironed out so that it's a win-win for all the segments of the industry as well. Thank you so much for being with us. Let's now also welcome my colleague Chetan Bhutani, who's been covering and getting us all of those updates as far as the auto sector is concerned and all the developments there. Chetan, hi. Chetan, all the companies, most of them have already started to announce the price cuts. I think the big question for the consumers will be how to decide which cars are actually giving them the maximum benefits, and which cars to really go and look forward to. Maybe if you could just break it up for segments, under 20 lakhs, over 20 lakhs, whatever is convenient to you, to help us understand, which are the cars that one should target.
Well, Sakshi, very interestingly, from the data that we have crunched, we see that under 10 lakh car segment and above 30 to 40 lakh car segment is the one which has been maximum, getting maximum savings for for the consumers. If you look at a Maruti Suzuki Alto, you save about 60 to 70,000 odd rupees. For a Renault Kwid, you save about 60,000 odd rupees. WagonR gives you about nearly 80,000 rupees savings. Tiago gets 70,000 cheaper. Triber, the seven-seater SUV, gets about 80,000 cheaper. In the 10 to 15 lakh car segment, we see the i20, the Altros, the Swift, the Verna getting close to about 1 lakh to about 60,000 odd rupees, getting cheaper. However, interestingly, 20 to 30 lakh segment also sees a cut of nearly 1.45 lakhs respectively. We see the Dexon car also by 1.5 lakh cheaper. XUV 3XO, the Mahindra SUV, also cheaper by 1 lakh rupees. Tata Curve by 65,000, and Hyundai Venue sees a 1.23 lakh cut. In fact, the 30th lakh the segment is one of the most most anticipated and well managed segment for the consumers in India. Fortuner gets a 3.5 lakh rupee cut. Audi models and a BMW model gets to about 4 to 6 lakh odd rupee cut. So consumers have a whole lot of variety to choose from. But yes, in the below 10 lakh car segment, there are a whole lot of opportunities and of course more savings that they could probably get.
Fantastic. Thanks a lot, Chetan, for helping that out, helping us with all of those details. I hope this has given all our viewers a lot of clarity with respect to how to look at the kind of cars that you can actually look at. All the segments, Chetan has broken that for you to really look at those cars which are actually giving you the maximum benefits there for you to make it, an easy decision when it comes to you purchasing your next vehicle in this upcoming festive season. Coming back to Avinashji. Avinashji, so many cars will be on the radar, two-wheelers will be on the radar of consumers at this point in time. Probably this is the best time if somebody had been already planning to buy their next vehicle to really take the benefit. How are you really looking at, which are the segments or the companies that would tend to benefit the most? I mean, is it across the board? Can one take any pick across the auto space, or should one really be very choosy at this point in time when it comes to selecting stocks?
No, I think my guess is that, see, I think most of the customers, I think, which are in the middle or the lower category, the 10 lakh rupee and below 10 lakh rupee segment cars are going to see the maximum amount of benefit. And I think clearly this is one segment, which has lagged behind. I think of late we have seen a lot of premium cars, the larger SUVs, obviously getting sold more. But I think with a lot of financing help from NBFCs, from banks, I think you could see both the middle segment and the lower segment, that is 10 lakh rupees and less. These segments could significantly benefit more. So I think, a company like Maruti, or for that reason, and even Hyundai, could definitely see a decent amount of traction both in the lower and the middle level category. The premium cars are anyway going to be taxed at a higher level, so they don't get the benefit of GST cut. Most importantly, for the component companies, companies like Sundaram Fasteners, Lumax Industries, typically Uno Minda, these are companies which are directly going to benefit because they have a large exposure on the passenger car segments across all categories. Again, ancillaries which supply to the two-wheeler segment. There are a lot of bearing companies like NRB, SKF India. Then there are a lot of companies which cater to the two-wheelers in terms of the lamps and the electrical systems, the cabling wires. So you're going to see a host of auto component companies benefit within from the two-wheeler kind of volume growth kicking in, because that is one segment where already a double-digit growth is there with a good monsoon, with already two interest rates cut. My sense is two-wheeler segment could be the biggest beneficiary, followed by the passenger car segment. So I think companies which are directly making OEMs and products here, plus companies which are catering to them as OEM customers, are definitely going to see strong volume growth in the second half of this financial year.
Got that. When we also talk about one more segment that we cannot forget, when there is a rising demand for cars, when there's a rising demand for two-wheelers, there's also going to be a lot of financing to do. So how are you looking at this entire benefit in the festive season to play out for the banks, NBFCs at large? What are your top picks there, sir, with respect to the companies or the banks, financial, companies that have a larger exposure to such auto loans, vis-a-vis the others maybe?
No, I think banks as well as NBFCs both would benefit. See, I think if you talk about NBFCs, companies which are focused on commercial vehicles, something like a Shriram Transport could benefit. Bajaj Finance is very large in the B2C segment and across categories. So I think, Bajaj Finance also should do very strong business. According to me, most of the private sector banks like Axis Bank, ICICI Bank and RBL Bank, and even the private public sector banks, these banks have also got very aggressive on the consumer financing loans, specifically for two-wheelers and for vehicles. So here I think you could look at Bank of Baroda, Canara Bank, State Bank of India. So I think, banks are also going to benefit from the fact that not only is the auto sector going to provide them fuel for higher credit growth, but even corporate capex, hopefully from the government and the private sector side, is going to be quite significant. Most importantly, for the GST cuts across all product categories, the government is very clear that they want to ensure a very strong credit growth being passed on to the customer. And therefore, if credit growth improves, then the banks are definitely going to benefit, and that is going to improve their yields. And obviously, the third and the fourth quarter should be good for them. So I think net, one should look at PSU Bank because they are available at a fair discount to the private sector players, and good NBFCs like Bajaj Finance, which can be accumulated on, for a medium to long term kind of time frame.
Okay, so that's as far as the banking story goes as well. What about consumer durables, sir? Are you hopeful of that also showing up? We are already getting to see how some of the marketplaces where these sales go off on September 22nd again, like Amazon has announced and Flipkart would also be announcing. So the Great Indian Festival, the big billion sales, all of that will also probably go off on September 22nd. That coincides with the first day of Navratri and with the GST cuts as well. How are you looking at some of the consumer durable names there?
No, I think see consumer durables across categories like white goods or maybe brown goods, electronic items. These are definitely going to be see a lot of increased volume growth. Plus, a lot of kitchen category kind of equipments, typically which are used both in the house as well as industrial establishment should see a good volume pickup. And I think clearly, here NBFC financing, the bank financing is going to play a very important role. Rural demand, especially for these products, is increased. And I think you're going to see a good volume push in the third and the fourth quarter. So I think we'll have to wait and watch. But one thing is very clear, with lower cost of financing, I think these product items could see a decent kind of volume growth.
Okay, fair point. I hope this has also really helped you out there, viewers, in understanding how to spot some of the great ideas that you can spot. What's happening within the real estate, sir? How are you looking at that segment? We do know allied sectors like cement would be benefiting from the GST cuts. What is it likely to do for the entire construction real estate sector at large?
No, I think, see, ever since RERA has come, Sakshi, the industry has become very well regulated. And I think, most of the large players, like in Bombay, there are very dominant players like Opera Realty, Loda. Typically, if you go to Gurgaon, North India side, Anantraj is a very large player in the North Indian market. In the Mumbai market, again, Mahindra Lifespace is another, big real estate player. So I think, all depends on the kind of order book and the inventory they have built. I think we have not seen any price cuts from these companies, and I think even larger players like DLF should do well. My sense is that this is a sector which is now well regulated, well researched. So I think one has to take a stock specific call. We are positive on companies like Suntech in India, in Bombay, then Oberoi Realty, then typically or Loda, and most importantly Anantraj from the North Indian market, specifically because they have two very big divisions. One is the real estate business which operates in Gurgaon, and the second is a data center business. So I think you need to give in some more time to these companies to actually get the benefit of lower interest rate, lower cement prices. But net, I think we are structurally positive. We feel that over the next say 12-15 months, if one were to look at this sector, a good amount of risk reward could happen for those investors who can patiently wait and expect decent earnings for the second half of this financial year.
Fantastic. Avinashji, thank you so much for being with us on the program then and for sharing with us all your thoughts on the entire auto sector and of course how to really look at the upcoming festive season with respect to opportunities in the market. It's always a pleasure to host you. Thank you so much. All right, viewers, let's also shift focus to a very important news update. The American dream of a lot of Indian techies could actually soon be in jeopardy. And that is because the man behind the US visa program, the director of the US Citizenship and Immigration Services, Joseph Edlow, has indicated at big reforms to the H-1B visa system, expressing concerns at how H-1B was keeping American graduates out of jobs. He also said that US was looking into the system but added that he did not want to go ahead of the White House.
Anything you can tell us about, are there any plans about what you all are going to be doing with regard to changes to H-1B?
I don't really want to get ahead of the White House on what we're thinking on H-1B. Obviously, it's something that we're looking into. I've said before that I think the H-1B system, if properly monitored and properly scrutinized for integrity, can be a useful tool, especially when employers are bringing people here at the highest wage levels. But my big concern, and will always be my big concern, is keeping U.S. citizens, the way that it's keeping U.S. citizens out of the job market, especially those graduating from universities with STEM degrees, and they're being kept out because employers are able to get more experienced individuals at lower wage rates using the current 4-tier wage level. So, there's things that we're going to be looking into, but again, I don't want to get ahead of the White House.
All right, viewers, let's shift focus to the market closing. 3:30, the Nifty has shut shop at 24,792. So we've tad slipped below the 24,800 mark. 51 points higher in trade. So this going has been positive as far as this week is concerned. But look at the kind of choppiness and some profit booking that took place towards the end of the session as well. Look at even the Nifty Bank. Almost a similar sort of profit booking has taken place there. So you've seen the private banks slip into the red. FMCG, pharma, consumer durables from the consumption-oriented spaces also slipped down, and IT also under pressure. But autos clearly the star of the show today, 3.3% higher in trade. Mid-caps also pulled up. PSU banks, real estate, metals, oil and gas were the other segments that pulled up. Look at Tata Motors. A lot of retail investors have been looking at that one, 4% higher at 719 today. Let's see whether this momentum can carry on this one. M&M, Bajaj Auto, Eicher Motors, again from the two-wheeler basket, continuing to surge strong. GSW Steel is another one that also pulled up in pace in trading session today. Let's look at the Nifty 500 names. Some strong names there. Precision camshafts, a 20% circuit. Remember, it's the auto ancillary that really is looking at demand shaping up for the auto sector at large. Let me also pull up Salazar Technologies, that's also up. And that's up by about 19% in trade today. MIC Electronics is higher. Bartronics is higher in trade. You also have names like MobiQuick Systems, 11% higher in trade. Prime Focus is also moving up in trade. These are all the names that have actually pulled up in this session today. 3:32. Let's wind up the closing edition right here. But do stay tuned as Beyond the Market Hours coverage from the world of business and finance continues on the other side.
On August 27th, as Trump's additional 25% tariffs kicked in, Indian businesses were left staring at big revenue losses.